It is hump day, and we are 30 minutes from the stock market opening. My name is Victor. I like analyzing, trying to find companies that are a really good investment long term. And long term can mean a year, it can mean 5 years, it can mean 10 years. I'm just looking for very good value in companies. I like technology stocks, I like growth stocks, I like pharmaceutical stocks, I like a variety of stocks. And I have a portfolio that I've worked on for about 30 plus years. So I like sharing my analysis with other investors, and it is great to be on Stonks. I am streaming to you here at 9 a.m. Eastern, 30 minutes before the stock market opens. Viewer requests are encouraged. If there's a stock you want to take a look at, please put it in the comments, and let's see where we can crack open some financials and find a very good investing idea. It looks like we've got some viewers. Enzima, teach me how to make big money. Glad to. My method is to make money long term. And the way I like to set it up is I want to make money every year. And I want to make money while I sleep. What does that mean? If you buy into great companies, those great companies rise over time. And Warren Buffett has stated that if you don't learn how to make money while you sleep, you're going to end up working for the rest of your life until you die. That's not my plan. I like making investments that just go up over time. My investments in stocks and real estate and cryptocurrencies have really done that. So, as we talk about making money, I like making money. I like making substantial gains, substantial income, but I like doing it with an analysis of companies and buying into great businesses. So, that's my whole philosophy. And I'll share that with you as we look at companies. All right. So, let's take a look at a few things that I think are worth taking a look at as we start the day on a Wednesday, August 28th. And the futures look like they're relatively flat and they're going to open to the downside. So, not sure why my screen went dark. So, give me a second here. There we go. All right. So, the market is flat. Today is a big day for earnings. NVIDIA is going to announce after the market closes. And I'm sure you don't need to be reminded that Stocks is going to give away $10,000 at around 1:30 Pacific, 4:30 Eastern. And man, I'm going to tune in. I've got my tickets saved up and I'm going to cash them in today. See if I can grab a little bit of that stack. It'll be fun just to see where NVIDIA ends up. I'm going to analyze NVIDIA on this stream, just to share with you what I'm seeing, and we'll see how things play out today. But today is the big earnings day for NVIDIA. It's also earnings for CRM. It's also earnings for Hewlett Packard, the consumer PC business, and those two will probably kind of fly under the radar because there's so much attention going on with NVIDIA. Understandably, it's a super hot stock. So, all right, so that's what's going on with the markets. Crypto was really falling off a cliff yesterday. It looks like it's recovering a little bit, but crypto really took kind of a little bit of a dip. The last 5 days, it's down 6%. I'm a hodler. Now, I like using the same term, and I was on an awesome live stream yesterday on Stonks where these guys, they just focus on crypto. And I was on there and I said, hey, I hold Bitcoin. And they go, hey, you're a hodler. And I'm like, all right, I guess I'm a hodler, but I guess I hold stocks, I hold bonds, I hold real estate, but I hodl BTC. I'd rather use the same term, but I guess when in Rome, you got to speak as the Romans speak. So when I join that awesome crypto stream, I will have to adjust my language. So I'm hodling BTC and I'm hodling Ethereum. I think it's a long-term play. I think the space is going to be valuable in the future. I've been investing since 2018. And it's really just a place to store value for me. It's not, I don't claim to understand how it moves and why it moves. I could just tell you that, when I first started buying coins, they were $1,500 a coin. Now they're $60,000 a coin. The math is pretty easy. It just went up. They went up tremendously. And I think they're going to keep going up because the scarcity is there for that particular asset class. We'll see. All right, the market's pretty flat this week. I don't think we need to cover that. It's too boring. So let's move on. Economic news today. Oil. Oil is we're going to see data that comes out says what are oil reserves looking like. If reserves are really low, oil price would go up because it's expected oil companies are going to have to produce more oil. I have a stock, Chevron. It's a significant, investment. So I'm going to take a peek at that. It's going to be announced in roughly an hour and a half. So we'll see what happens there. Tomorrow, bigger news, GDP. And GDP is going to begin to tell us, are we in a recession? Are we going into a recession? Are we avoiding a recession? Economic data kind of tells us that very big picture, where are we at? So that's going to be something that I'm going to take a look at tomorrow. Interest rates, pretty flat. In the short term, it looks like interest rates are rising a tiny bit, not enough to really say that they're rising or falling. And then long term, same thing, not moving in any direction. So interest rates are pretty stable. So again, just a reminder, I love seeing viewer requests of, hey, let's take a look at a stock and let's analyze it. I've got a list of 5 stocks that I wanted to cover because I think they're interesting for the day. But I want to hear what you think, what stock you want to take a look at and talk about. Or if you have questions, like how do I analyze a company, or why do I use free cash flow as the primary determination of a value of a company or earnings per share? Just bring on the questions. Glad to take them on. So I'm going to start off with probably Super Microcomputer. It was announced at Hindenburg, which is a firm that, you got to follow the money to see where a motivation of an organization is at. They short stocks. So they research companies and they believe they have found some accounting irregularities over at Supermicro. That is a huge accusation, by the way. If it's not true, I would say Hindenburg is really doing a disservice to the market. If it is true, they're doing a service. But I hope that both sides have good information provided soon. And the reason I bring up Supermicro is this is a stock that I have worked on for the last 6 months, and I'd like to go through what I've done with this stock, which is I shorted Supermicrocomputer. And the reason for it is Supermicrocomputer is a stock that is at its core business. It is a computer hardware business. It's a accelerated computing server company. And I agree that accelerated computing, high performance computing is really popular right now to build out the infrastructure that AI needs. Got it. So when I look at a hardware player, the things I do not like about hardware companies is they don't make a lot of profit. They don't generate a lot of cash. Their valuations are very low. It's not like a software company. It's not like Google Alphabet with their search business. It's not, AWS from Amazon that has really big margins. That is not what we're talking about when we talk about hardware. So when I see a hardware company, even though it's a premium hardware company that does, high performance computing, I begin to question the valuation, especially when you see charts like the one I'm showing, which is this stock was just trading along, acting like a hardware company. Let's call it early 2023 at $92 a share. And then the market went berserk and said, AI is going to change everything and we're going to do it immediately. So Supermicrocomputer is worth more than 11 times the value was worth a year ago. I look at it and go, I don't believe it. I do not believe it. Now, I recorded videos on my channel on YouTube, and I expressed that I didn't believe this, and I thought that this was going to resemble companies that faded during the dot-com bubble burst. And I put some capital out there, and I put it at risk. Part of it is because I want to make money. That's why, I love investing in stocks. I love following the economy. I love getting into financials and trying to figure out where a company is headed. And in most cases, I'm correct in that expectation. How correct is, it varies from company to company. But in this one here, my expectation has been met. I started shorting the stock somewhere around this price, and I sold the stock I shorted the stock, which means I sell shares I don't have. So I opened a short position on Super Microcomputer. The stock really went down fast from the peak to where it's at now. It's down 52%. And I'm fortunate to have pretty much caught, that overall gain. When I look at my Super Microcomputer investment, I bought in the course of, call it, less than 2 months, I made 52%. And, I didn't have time to really put more capital. I tend to want to dollar cost average my investments. I'm not good enough to pick tops or bottoms, but I believe that my analysis reveals when a stock is misunderstood, it's misaligned with its valuation. So overall, I made 52% in less than 2 months. So that's a heck of a return. And I exposed, to $2,648 of capital. I didn't have time to do much more because the stock just cratered. And now with the Hindenburg information that's out there, it is going to be interesting where the stock goes. Overall, I think that the super microcomputer business is overpriced, and it's overpriced currently. I updated the share price that it's at. It's overpriced by 41%. So it's not like grossly overpriced. And I am giving Super Microcomputer a very optimistic forecast for their cash flows. I'm giving them a very good forecast for their earnings per share. So I'm giving them kind of a favorable expectation just to make sure that my short position was on solid ground, so to speak. And overall, I think that, I could see Super Micro dropping further. And the reason for it is the stock market's incredibly emotional, and it's incredibly, it's a popularity contest, and it's an unpopular contest. If a stock becomes unpopular, it's incredible how fast, participants sell off. I'm sure investors, especially smart money investors, hedge funds that are in Super Micro, are really looking hard at, okay, should I be in this investment? Does Hindenburg have a point? All that stuff is not in my wheelhouse. I'm not at that level. I just see the story of Hindenburg coming into the market as a very significant piece of news for Super Micro. So Super Micro, we'll see where that goes. It'll be interesting to watch it. Again, I thought it was overpriced. I have videos that are time stamped, going back 4 months, and that was my feeling 4 months ago. So it's not something that I'm like waking up on August 28th saying, "Oh yeah, I agree." No, I saw this 4 months ago. I cited it on my videos. I put capital out there. I'm a little bit of a I gotta trust my analysis. I gotta trust my instincts, because at the end of the day, if I'm not going to trust my own analysis, I should just buy ETFs. Call it a day. Just put all my wealth into, ETFs, not worry about it. But that's not who I am. I love this stuff. I want to analyze. I want to get better. I want to be a better investor in a month. I want to be a better investor in a year. I just want to keep getting better and making more money. So, all right. So I've got Dude Burkett, 10K delay super microcomputer Inc. Not sure what that means, Dude Burkett, but if you could explain further, I'd appreciate it. All right, so let's keep rolling. So we talked about Super Micro. Another stock I wanted to talk about is a little bit of an extension. Looks like Boss Haas wants to look at QVRO. That is next on the list, QVRO. I don't think I've ever seen that. Hang on with me. I'm going to go over Clear Secure. So a viewer yesterday, and a couple of viewers said, "Hey, let's take a look at this company and that company." I think we looked at like 6 companies that were suggested by viewers in yesterday's stream, and this was one of them. And out of the 6-pack that we looked at, this was like the queen of the ball, the best one. And I dug deeper and deeper and deeper, and I kept finding gold. I wanted to show that to you and just kind of cite what I like about it, why I've decided to invest in this company, what's behind it. So just high level, right? These guys do security, not a bad place to be, but they're not doing security that competes with like Palo Alto or CrowdStrike that does PC or computer and enterprise-based security. That's definitely a very good industry, but these guys are actually doing biometric security. When you go to the airport, they have a service that gets you an accelerated kind of entry into the terminals. So they're really kind of picking security that's kind of outside the mainstream and kind of picking a place that they feel they can grow and create differentiation, grow some competitive advantages and a moat. So I like that. So I liked that they were different. I like that, hey, they're not like, hey, we're another CrowdStrike, look at us. No, they're like, hey, we're different. So that's very good. I like that differentiation. I also like the green on the screen. I'm like, man, these guys are growing nicely. They are a small company, but green on the screen is green on the screen, folks. Growth is growth. Now, if you can grow, be profitable, and generate free cash flow, you are really playing my tune. Look at that. The cash flow growth over the last 3 years, and if you continue into the trailing 12 months, I like data that has an upward slope. To me, data that shows me this, it shows that the business is building. It's almost like putting Lego pieces together. The Lego pieces fit together and you're making something bigger. You're making a more valuable company. What I don't like is choppy data. 1 year positive, next year negative. 1 year positive, and so forth. You're like guessing at where the company is going to go next. Here, this is good information where I'm expecting they're at 269 trading 12 months, and look at that growth rate. Probably going to be at 300. That's the next step. That's the next Lego piece we're going to put on this valuation. So I like the data, and I like their balance sheet. Their balance sheet, they have 669 million of cash, and total debt, they have 124. They can write a check and get rid of all debt if they wanted to. So very solid balance sheet. I'm in love with their cash flow. I like their growth. So high level, I'm like, hey, this is a good little solid company here. And I like small caps right now because massive caps, super caps like NVIDIA have just absorbed so much of the market's valuation. We have Apple at 3.4 trillion, NVIDIA at 3.1, 3.2 trillion, Microsoft 3.1 trillion, Alphabet, Google 2 trillion. It's just they've grabbed so much of the market's wealth. It's left small caps behind. That's an opportunity. It's an opportunity because I'm seeing a lot of very excellent fundamentals with this small cap company, and I'm seeing growth. They're small, which means they can double in size and nobody pays attention. They can triple in size and nobody's even going to notice them from a big, massive company. Like, is Microsoft going to notice? No, they're small enough to avoid the radar. They just have to keep growing. Now, the only unfortunate thing, and of course, what are we going to do? Is, man, we're showing up late to the party. If you had invested in this stock a month ago, you'd be up more than 40%. So congratulations if you're in this stock. Congratulations if you bought it a month ago. But it is what it is. I guess other investors are looking at this and, like me, are impressed with what these guys are doing. Now, when I look at these guys from a valuation perspective, let me show that to you. They also have a symbol that's kind of a little funky, if you ask me. U. That's kind of interesting. But here's the valuation. And I have to correct something. I was watching my live stream repeat, right? And I'm trying to do multiple things at one time. On the live stream, I read the financials and I read it and I said 269 million. And on the live stream, I typed in 169 million. And even with 169, it's still valued quite well. But I corrected it on this. So if you watched yesterday's live stream and caught that error, yeah, I made that error. Yes. Sometimes I'm on the West Coast. It's 6:21 in the morning here. I'm drinking coffee. I'm probably at 98% brain capacity. And yesterday I made an error, but I'm correcting it on this one. Now I'm using a discount rate of 10%, which is higher than I would use on Microsoft, a very well-known company. And that's because it's a smaller company, higher risk. I want a higher rate of return. My forecast of cash, we're going to start with 269, which was their trailing 12 months. I'm going to grow it, I believe, by 10% for the first 4 years and then grow at 5% in terminal value. I believe that security is here to stay, especially the security around airports, stadiums, arenas. It just keeps getting tighter for good reason, just to keep people safe. And when I take all those things into account, I take that cash forecast, I discounted by 10%, I end up with a value of all those free cash flows of $5.6 billion. I add the cash and take away debt, and I get to an equity value of $6.2 billion. The market cap of the company is a little behind. Again, it's the morning. I'm still drinking coffee. And it leaves us with 126% discount based on cash flows. Cash is king. Study the most valuable companies. No big surprise. Apple makes a ton of free cash flow. That's why they're worth what they're worth. They can buy back shares because they provide a ton of free cash flow. So they buy back shares. So they've created the biggest value company on the planet because their business produces high cash flow. So that's what I'm doing here. I'm evaluating companies to see, do these guys have the fundamentals? Is their business really attractive? And attractive means it's growing, it's profitable, it generates a lot of free cash. In this case here, my answer is yes, this is an attractive business. Earnings per share reveals a more modest discount, but it's still at a discount. Analysts had a much more optimistic view of earnings per share. Earnings per share only counts for 1/3 of my blended value. And the reason for it is I like looking earnings per share because especially young companies may be really expanding their earnings per share. And I like to take that into account, but I give it a lesser weight in my overall value. So earnings per share is going to be $1.28 this year. PE, I'm going to give them a 25. They're growing, but they're small. I could easily go to 36, but I'm going to go 25. Growth rate 12%. Analysts think it's much higher, but I'm going to go with that. So modest discount at 22%, but blended, it's 91%. So I'm a buyer of you. And again, I don't offer financial advice. I'm just an investor telling you what I'm going to do. Don't take any of what I say as a buy, hold, or sell recommendation because I never recommend anything. But I'm going to be buying shares. I bought some shares yesterday. It looks like the stock is going to open lower, and I'm probably going to buy more shares today. I like to average my investment. I like finding companies that are worth more with the expectation that this business is going to be worth double, if not more, over the next 5 years. So I want to buy while it's low and then reach a really good valuation. An example of that, it's easy to see, is the market is the psychology of the market's just what is sometimes just amazing. And let's see if Google is going to work for me or not. Maybe somebody's got to plug in a server over at their headquarters. So here's Meta. Now, obviously, this is a solid business, free cash flow coming out of their ears. They generate tremendous free cash flow, and obviously they're growing. And the market toward the tail end of 21 said, Meta is terrible. We don't like it anymore. So we think it's only worth 24 cents on the dollar. We don't like Meta. We hate it. And guys like me are like, well, I'm in love with their cash flows. I'm in love with their business. They're number one, clearly number one. Nobody else rivals Meta. Who's going to compete against Meta? Against Facebook, Instagram, WhatsApp. Now they have Threads. Now they have the Meta AI business. So I said, stock market, thank you so much for this beautiful discount. I'm going to buy shares. I know it's scary right now because everybody's selling stocks, and I bought shares here. Now, the shares that I bought, I already had a lot of shares here. I had shares here. I had shares here. But around this time, it takes internal fortitude. But I bought shares in that era, and those shares have done quite nicely. That's what the market does over a long period of time. So I am looking at you, the stock. I'm not looking at you. I can't see you guys. It'd be nice to see you guys. Someday we will see each other. And you can see that the market's like, whoa, what's it doing with this stock? It used to be a $58 stock, and now it's at the low point. The market said, oh, this business is terrible. We're going to sell it off at 28 cents on the dollar, discounted by 72% from its height. And then the same market said, whoa. I think we made a mistake. It's actually worth more. And it really has been recovering. So is the stock done going up? No, I think it's going to go up further. I think the fundamentals really support that. And you can see that the stock market will offer us great prices on great companies, but we just have to do the homework and find them and then buy it and let it grow up. Analyze it twice a quarter, make sure that we still feel the same way, and make some money. Make some money like I've made on Meta. I'm hoping Clear Secure is worth more than double its current value, maybe a $60 stock in the next couple of years, for sure over the next 5 years. If they keep operating the way they're operating, the demand for security is not going away. The demand for security at airports, if anything, is going to get heightened. So all those things to me speak to this is a valuable company, so I will be buying. So thank you to, I forgot who suggested it yesterday, but thank you. I appreciate it. All right, let's take a look at QVRO. No matches. What the heck? QVRO. QVRO. All right, so I'm not finding this symbol, Boss Haas. Can you help me out? So these guys, QVRO, $1.13. Are they traded in a foreign market? I'm in the US. So are we dealing with a foreign market? So okay. So maybe the name of the company is, no, there it is. QRVO. Okay, so maybe you got the letters flipped. QVRO, and it's supposed to be QRVO. Is that correct, Boss Haas? Am I going to run down the right track here? Hopefully, Boss Haas. Yep. All right, I got a yep. Okay, these guys engage in development, commercialization of technologies, products for wireless, wired power markets, operates 3 segments: high performance, analog, connectivity, sensors. Okay, cool. Now, if these guys are tied to the data center, nope. Okay, they didn't go berserk with the data center build out, which has made companies like Supermicro too expensive, and I already told you that story. All right, so these guys, QVRO. All right, so let me look at their website because I like to, just have enough. So this is classified as a semiconductor, but they're not doing chips. They're doing more like the other bits and pieces that go into what will be a finished server or a super cluster, something that's going to be in a data center. So, or an automobile or a laptop, right? So that's what these guys are doing. So wireless, which is very important. Now, wireless is what built Qualcomm. It's what really built Broadcom back in the day. Broadcom has really diversified, but Qualcomm continues to be a very strong wireless and connectivity semiconductor company. Okay, so I have a sense of what they do. I've been investing in semiconductors for a long time. Have a little bit of a frame of reference there. So over the last year, it's up just 9.52%. The market just opened. Okay. Over the last 5 years, at one point, the market thought, man, these guys are awesome. They're worth almost $200 a share. Now they're down to 113. Might be an opportunity. $10 billion market cap. I still think that's a small cap. Revenue is $4 billion. Okay. That's reasonable. They're losing a little money, but that might not be a problem. Forward P is 16. Okay. Analysts say it's hold and it's fairly priced. Okay. Man, I like this green on the screen. So it looks like they were growing nicely. The market thought they were an awesome player. They had a loss of revenue. Interesting what happened there. They grew modestly in what is probably going to be their fiscal 24 that ended in March. And now they're trading 12 months, which probably just includes one positive quarter. Yeah, nice green on the screen. It looks like their growth rate on the quarterly is looking really good. So that's good. Okay. We'll look at the balance sheet and then the cash flow. So cash, they have $1 billion of cash on the balance sheet. And they have $1.9 billion of debt. Not too bad. So $900 million of net debt. If we look at their EBITDA, it's $761 million. So in about a year and a quarter, a year and a half, they can pay off all their debt. If they really focus their EBITDA on paying off debt, it's below 3 years, which is good in my opinion. I want to be below 3 years on EBITDA, debt to EBITDA. Analyst, So this is covered by 17 analysts, which is a pretty good data body of data. Some analysts are really optimistic. Average is 118. Their earnings per share is expected to be 6.21, $6.21. It's going to grow nicely over the next couple of years. That's impressive. Okay. All right. So back of the napkin, based on their growth rate, if I look at their free cash flow, I haven't looked at their free cash flow. All right. Free cash flow, 700. So you see their cash flow here, always been positive. That's good. Good data set. They make me confident that they're going to produce free cash flow. It seems to me that this business inherently produces free cash flow. It's not an anomaly. So 743, they're growing their business now at a very, very strong clip, above 30%. If you look at the quarterly growth. So I'm liking that. Okay. At 743, I multiply that times, let's say 25. I'm going to get to about 18 to 20 billion dollars of market cap value. So this stock is worth investigating, analyzing, seeing if it's a good buy. Now, in today's trading, it's up a little bit. I would want to do a little more homework. Let's do a quick valuation since we have the time. All right, so I'm going to compare this guy. What would be a good stock to put it next to? Let's put it next to NVDA. All right, so I'm going to cover NVIDIA eventually on this live stream, but for now, let's just go ahead and copy this model, pop it in here, and take a look at. Looks like I did something wrong. All right, so QRVO. And what was their name? QRVO. This is a small company. See how NVIDIA has a discount rate of 8. I'm going to 10. They're profitable, but you saw how their business had a loss of revenue. So I'm going to go to 10 because it's a higher risk. I want a greater rate of return. Their free cash flow for the trailing 12 months is 743.39. Make sure I type right today. I don't want to screw up like I did yesterday. All right, so this is going to be trailing 12 months. Growth rate, it's not going to grow like NVIDIA. Sorry. But the growth rate looks good. At a 30% growth rate, I'm going to go with 10, and I'm going to leave it at 4. Semiconductors are cyclical, okay? Data center build-outs, they build, and they go, okay, it's built, and then you have a loss of revenue for a year or two. So that's why I'm only going with 4 on the long-term growth, but it looks like their current quarterly growth projections look pretty good. So you can see that I'm valuing the free cash flows at $13 billion. Adding cash, which was, I think, a little over $1 billion. 1038. All right. And then debt was, I think, close to double that. So total debt, 1961. And then their market cap is 10,780,000,000. Shares outstanding, 9486. And their share price is 113.09. So there's about a 16% discount if we look at cash flows based on the forecast I just put together. If we look at what their earnings per share looks like, 621, and it's going to jump up to 807. So that's pretty good growth. So we're going to go 6.21. It's a growth company, but it's small. So I'm not going to go 36. Their growth rate, I'm going to go with 15. And it shows a very nice discount when we look at earnings per share. And I agree with it. And it's going to grow nicely up here. So you see how I use earnings per share as an influence to my overall value. This stock is discounted by 30%. I still need to do more homework. I really want to study the company, make sure I'm not missing something. I'd like to understand what's causing the more recent acceleration in revenue Did they introduce a new product that's really good? What caused the previous drop in revenue? That's a question I need to answer before I decide to invest. So this is an interesting one. It's not blowing my socks off. It's not like, whoa, this is like the one we just saw in symbol YOU, but it's interesting. I think it's worth tracking. And if we follow this guy and we go, it's QRVO. And what's going on with Google today? So you can see that the market just went crazy over this stock, and then it came down. More recently, it's really come up quite a bit in the last, 3 weeks. It's up 12%. But if it reached kind of one of these low points, I mean, it'll make that valuation even more attractive. At this price, first cut discount is like 30%. But what if it dropped, to $100 a share? Maybe it's now presenting a 40, 50% discount. Okay, it's getting pretty darn attractive. Right now, it's not like I'm not jumping out of my seat saying, oh, I gotta analyze this right away because this might be a really good buy. I think it's interesting. I think I'll put a little star next to it, do a little more analysis on it, take a look at it later. But that's QRVO. Boss Haas, thanks for bringing that up. Anybody else you want to look at a stock, man? We can beat it up, crack open the financials, and see what's inside. See what kind of value these companies are producing, and see if we can find a nice gem. What Alpha Exchange? Cool handle, Alpha Exchange. Now, is this Alpha Exchange the crypto guys that I was watching yesterday? And I'm doing well this morning, man. I'm doing fantastic. Dude, I loved your stream. Thanks for explaining liquidity pools. I'm a crypto investor, but I'm 56 and I've grown up investing in real estate stocks, and I love the crypto story. I'm also a professional in the technology industry, so I know that the planet is digital. The planet is connected. Having cryptocurrencies make a lot of sense to me. They make a lot of sense. I just can't explain it to you like I could explain financial statements, because I've been working with financials for 30 plus years. I was educated in accounting. So I can crack these things open and explain them to you. So when dudes like Alpha Exchange present their point of view on crypto, I am a student of the game. I just want to thank you for being out there. I will be on your streams asking more questions. And I appreciate how you explain liquidity pools. It just reinforces what I thought I knew about liquidity pools. I'm going to keep learning because I am invested in one liquidity pool and wanted to expand that, but I want to expand it after I really understand it better. So I appreciate it. All right. What do I think of FFIE? Faraday Future. This is the EV company. I believe they're a Chinese EV company. No, it's an American startup, technology focused development. Based in LA. That's where I'm at, man. I'm south of LA. So why do I have a connection with Faraday in China? Not my memory. Okay. Now, sometimes my memory is there. And sometimes I'm like, no, you had it wrong, dude. You were wrong. So, United States. All right. So, okay. So let's take a look at this, and then I'll give you my thoughts on the auto industry. Okay. So this is interesting that they're right here in my backyard, and I haven't been paying attention to them. But let's take a look. So market cap, 85 million. Woohoo! I think if a bunch of us put our money together, we could probably buy the company. Revenue, 1 million. Not looking good. They lost 318 million. Okay. So we're in the high risk area of investing. So these guys are probably designing cars and saying, this is how we're going to take on the market. This is a little bit, the EV market has really created a lot of innovation And Tesla being such a great example, right? Tesla, and everybody forgets, the US government at the time wanted EVs. So they invested in Tesla and they invested in Fisher, something Fisker, but they went bankrupt. Tesla did well and they paid back the money, but they did have a federal loan. It oftentimes gets forgotten, but that was the case. And obviously, Tesla revolutionized the car industry. Applause for Tesla. Okay, great. Now, other companies have said, "Hey, we want to be like Tesla," and what's innovative about automotive is the effort to have robo taxis, self-driving cars, and our friends at Google Alphabet have created Waymo, which is operating in Los Angeles, San Francisco, and Phoenix. Really impressive. Now, these guys here, this is not an investment for me. I just don't know that these guys are going to make it, and there's a couple reasons for it. Let's take a look at their balance sheet. They have $79,000 of cash on the balance sheet. I have more cash on my balance sheet than they do. Now, that's a problem. I'm not operating an auto company. I just got to pay for my Chipotle lunch, pay for a couple things, take my wife out to a nice outing this weekend. That's it. These guys, dudes, you're going to run out of cash. We got total debt of $108 million. That's a problem. And I'm going to guess that they're burning cash like drunken sailors. Yep. The good news is their burn rate is slowing down, probably because they're running out of cash. They've run out of cash. Excuse me. This is as risky as it gets. This is super risky. Now, I'm not in any automotive company right now. And the reason for it is I'm going to show you a visual that kind of tells you how my mind thinks. Okay. Now, when you go to investors that have been incredibly successful, Warren Buffett, you go down the line. You can go to more recent, younger investors. There's no way around it. What Warren Buffett's looking for are companies, what he calls is a moat. Now, in college, in MBA school, we talked about barriers of entry. Why is a pharmaceutical company like Eli Lilly worth $1 trillion? It's because they have a patent on their weight loss drug that prevents anybody from copying that formula. If they do, they get sued and they get dealt with. So they get to keep competition away with that patent. Or why is, the iPhone so freaking, valuable? Is because it created a moat. Subscribers and users of iPhone continue to use iPhone, and on and on. So that barrier of entry creates almost like a monopoly-like environment. And our friends at NVIDIA are clearly in my most desirable square in my quadrant of desirability. They're a high growth company, very profitable, high free cash flow, and they have patents on their GPU technology. If somebody copies it, NVIDIA attorneys go kick some butt and they say, you must stop. And FYI, you owe us some money because you caused some loss of revenue. So they hammer whoever did that. Okay. Now, our friends at, Faraday, they're in automotive. Automotive, in some cases, is like probably in the red, which is too many competitors. You got from EVs, the biggest competition is going to come out of China. China's coming on so strong with their EVs, right? I'm just calling the balls and strikes. I'm an American. I love being a U.S. citizen. I love living in California, but I'm just going to call the balls and strikes. The Chinese EVs are set to kick everybody's butt. They're really low priced. They have a lot of technology. They have all the feature sets that everybody else has. They come in at like 75% less cost. And the US is freaked out and they're like, okay, tariffs, Canada, tariffs. And you know what? They're going to play the tariff game. That's fine. But you think about every other market, Latin America, the rest of Asia, and other places of the world like Europe, Africa, where they're developing economies where people do want to own a car. And they're looking at the price tag of a Chinese car versus an American design car. And there's a big price difference. The Chinese are going to win those markets. Having said that, I'm staying out of automotive. It's just not a good long-term play. this, the stock that we're talking about is a real risky venture. Now, if an angel investor came in, or some, I guess they call it a white knight, came in and said, well, we love your technology, so we're going to infuse $100 million into your company. Not saying it's going to happen, but if it did, this stock's going to double or triple. So if that's your game where you're like, man, I'd love to double or triple my money in the next 3 weeks, that's the lane you pick. That's not the lane that I pick. I'd rather buy a stock and be sitting on, double my money in 2 years, double my money in 3 years. That's my game, and that's the game that I could share with you. But this one here, I would not touch. And it also, if I had, like, I've worked in the software industry and I've worked in the pharmaceutical industry. I've been an accountant in the pharmaceutical industry. I've worked in developing or being a part of a team that developed a drug, went through FDA trials, put it to market, and the whole bit. So if I had expertise in an industry and I saw a company that maybe resembled like Faraday, that I thought, hey, these guys have something there, and most other investors don't understand it, but I do, because I have some inside information, or that's the wrong term. I have expertise in that industry, so I'm willing to invest. That might change the situation, but when it comes to the car business, no thanks. I think it's going to be really hard. All right, so looks like Alpha Exchange. Let me catch up to what you've got here. You were thinking of taking a gamble. Yep. And for all I know, man, you double your money quickly, and I would tip my hat to you, sir. It's not the lane that I drive in, but I totally get that people make money on stocks in different ways. Yeah. So, man, let me know how it works. I share with you my point of view, and again, the outcomes I'm looking for is I want my portfolio overall to double more than or double in 5 years or less. Okay, so that's everything. Stocks, stocks in technology, stocks in healthcare, stocks in energy, and I want the whole thing to double. Okay, and if it doubles every 5 years, I'm set. My kids are set. I'm good. Okay. All right. Thank you, sir, for bringing that up. Anybody else have a stock symbol that we can put on the chopping block, and not the chopping block, on display? That's a better word. If not, I've got some that I wanted to take a look at. MU is Micron, correct? So I have looked at Micron recently. I think they've had a tough month. So Micron's really part of this data center build out. They've had a tough month. From June 8th, tough couple months. From June 18th to now, it's down 37%. I think part of the challenge with Micron is that the story is data centers are going to get massive. They're going to be like gigantic. They're going to be, they're going to be the size of cities. Okay, let me call a timeout. I don't think that's going to be the case, but I could be wrong. I think data centers are going to grow, but not at the rates that people are claiming out there. It's getting pretty nuts. and the reason I say that is, well, if data centers are just getting massive, and they were supposed to start getting massive in 2023, why is Micron's revenue, it dropped 50%? That's completely in the opposite direction of this giant data center build out. Now, let's take a look at the quarterly. They grew 81%. That's phenomenal. That looks really interesting. Okay, so I don't think I've looked at it since I've seen this number, because that's a phenomenal number. And if you look at this quarter, and if we go back, they haven't had a quarter that high in a while. So that's good. But they just had this run where I'm like, when I was seeing all this red, we were seeing this stock just get priced up. And I'm like, why am I seeing so much red on revenue growth, and I'm seeing a stock just fly up? That's really interesting. But let's take a closer look, because this number impresses me. Their balance sheet, 8.3 billion in cash, and they have, what's total debt? 14 billion. So not too bad. I think they do a lot of EBITDA. So 14. So they have like 6 billion of net debt. If we look at their EBITDA, yeah, they do 6 billion in EBITDA. So they can, their net debt they can pay off in a year. All their debt they can pay off in a little over 2 years. So good balance sheet. And if we look at their free cash flow, so negative free cash flow. Okay. So something's going on with their business that I just don't quite understand. But I can't value a company that can't show me. Remember how I was showing you like symbol YOU? They had a nice upward trajectory on their cash flows. Makes me feel comfortable that, hey, it's going up. This is like, what's going on? How come there's so much? They might be like retooling the production lines and they're spending a lot of money. But this to me makes me risk averse. I don't want to take a risk here. I think the space is expensive. I'm not sure where it's going to go. You can see that, you know, my claim, and if you watch my channel, I've been saying semiconductors too expensive and it was going up. I said it here and it went up. So it's like the market was like, whatever, Victor. And it kept going up. And then at some point it said, it's too expensive. So it sold off. So Micron is not, to me, it's not ready. It's got to start showing me on the cash flow side. And let's look at the quarterly, see where we're at with the quarterly. So quarterly cash flow was positive, which is good. So I would revisit this in a quarter, see if they've got a trend of positive cash flow. And then what will be hard is, well, what's my cash forecast, right? How can I forecast cash if I don't have a consistent trend? It would, you know, I could take the last 4 years and take the average, maybe. It just gets harder. And I like companies to make it easy. I like companies, let me show you Apple, just to show you like what I'll call the gold standard. And I'm not a buyer of Apple. I'm actually the opposite. I think it's overpriced. But I just wanted to show it as an example. Why is Apple worth over $3 trillion? Dude, because they generated $59 billion of free cash flow. Billion. That's bigger than most companies operating, you know, on the stock market. Up, 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 down a little, and then up. So from here to here, they close to doubled their cash flow in the last 5 years. That's why investors believe Apple's worth 3.4 trillion is look at that cash flow. And when we look at cash flow, they buy back shares. They, you know, the company just accumulates tons of cash on the balance sheet. $62 billion of cash. Again, that's bigger than most companies. These guys have that cash ready to go. And their total debt, they have a little bit of debt. 100, well, they do have quite a bit of debt. 100 billion of debt, and they have cash of 62. Their EBITDA is $132 billion of EBITDA. This is such a, like, you know, this is like a company that prints money. They just print money. Now, Apple, I'll wait for a better time, but I think it's overvalued. And the reason for it is I just think if they haven't been growing their business. And if that iPhone, look at this growth, it's to be valued that much and you're not growing. No, thank you. What's the next product? What's the next catalyst? None. All right, I'll pass. Thank you. So Micron is not an investment that I would entertain at this time. I'd like to look at it in a quarter and see if that my opinion changes, but that's where I'm at with Micron. Let's take a look at EXEL. Nice to see you, Brian. Nice to have you back. You usually bring some pretty good ones, man. Let's see what you got. So this is Excelisics. Dude, that on Scrabble, I think that would be a lot of points. That'd be, I don't know, somebody can calculate that, but you got 2 X's. You got a lot of points there on Scrabble. All right. So it's an oncology company focused on discovery development of new medicines. So difficult to treat cancers. Okay. All right. So this is in the healthcare space. If we look at stock chart on this guy, man, look at that. It's like a saw. It's like a wood saw. So you're not totally satisfied if you've been in the stock for 5 years. 28% is not a very good rate of return. Especially there's no compounding here, but over the last year, it's up 15%. And FYI, one of the reasons why I'm bullish on healthcare is you'll find a lot of healthcare companies did not do very well for the last 2 years. Technology really took a lot of the capital, especially semiconductor. A lot of capital that would otherwise want to find a home with a nice biotech company that's high growth or a pharmaceutical company that's high growth. And that's why I think, hey, the market's going to begin to realize, like in Micron's case, that price maybe was too high. Semiconductor, super microcomputer, that stock price was too high. And they put that into cash and they're like, okay, where do I go? Hey, let's go back to healthcare, high growth healthcare. So if this is a high growth healthcare company, it might start seeing more attention from investors that are getting out of those high growth technology stocks and are looking for the next biotech company that's going to crush it. These guys have good growth. It's not incredible growth, but it's good growth. And they have a pretty good run rate of revenue. Now, quarterly, 35%. Beautiful. And the quarter before last year, yeah, looks good. Okay. Green on the screen. Nice, consistent growth. Good. Balance sheet. $1 billion on the balance sheet of cash. Total debt, 198. So they can write a check for all the debt they have. Very good. Free cash flow. They've been cash flow every year. Okay. Now the cash flow has gone down a little bit in the trailing 12 months, but their revenue is growing. So I'm comfortable that these guys are going to keep producing cash. So let's say we went to 300 million as kind of a good free cash flow expectation, multiplied it times 20. This stock would be worth around 6 billion. Yeah, about 6 billion bucks. And they're priced at 7 billion bucks. So this one here is not very well discounted. The stocks that I like that resemble this company are United Therapeutics. And we're going to compare it to this guy. I believe this one's discounted. I continue to buy shares. If we look at their growth, you see a similarity, except the growth is a little bit higher. They're about the same size company. And they do have drugs that take care of rare diseases. And they actually, another company tried to copy their formula, and United Therapeutics successfully sued, stopped them from selling anymore. And they're actually going to get some compensation out of it. Back to that barrier of entry, the moat. These guys have cash, 3 billion. Nice. It's a nice war chest. Keep developing drugs. And I think their debt is under control. Total debt, 500 million. They can pay it off. They can write a check and not have any debt. Their cash flow has been good. Free cash flow, positive, just like the other company, except you see a better growth rate here. You see how you're going 477, 663, 747, 87. So you see the acceleration of free cash flow, and that's what they were talking about on their earnings. Now, it's cool that these guys have a really good existing business, but what causes me to get excited about this business, and this one here, the more I look at it, the first time I looked at it, I should say, it kind of blew my mind. But God, I'm trying to get to. So, I think I can do it here. So they have these drugs here, and the story behind this company is so interesting. So the founder of this company, this person was successful in the communications industry. I believe she, if you know the satellite radio service, I believe it's called Siri Satellite. The person was the founder of that business. That person's daughter contracted this rare disease. There was no cure to it. So that person traded in their whole career, dedicated their resources to finding a cure. Totally like hit the books, hit the knowledge, sorry for the profanity, but found the cure and saved their daughter's life, and then took it to market. that was their first product. What a story. Well, the story gets even more interesting. So the whole science of growing organs, like you're growing a liver, you're growing a vital organ for the human body. They've been researching it and working on that for quite a while. Now, we know that you have animal to human transplants. I think we're comfortable with that. We know we have machine to human transplants, hearts and stuff. We're comfortable with that. But the science is coming where they're going to grow organs, and then they'll be able to transplant lab-grown organ into a human being. Now, I was educated in accounting. I'm really good with math. I'm, software guy. And when you hear the story of the company and you understand the founder, you're just, take my hat off to her. Incredible story. And then they're like, hey man, we're not done. We're going to grow organs in a lab. And you think about all the people that are pretty much waiting for an organ or they're going to die. The demand will be there, and the value and the service and the value add to society will be there. And if they get there, what's this company going to be worth? I don't know. But between now, even if that organ transplant business doesn't work, I'm going to be sitting on a winner. It's already a winner. I've got a good return on United Therapeutics. These guys have a tremendous story, and I keep following them. They keep really performing really well, and I'm keeping an eye on that organ business because I could tell you if that business works, holy smokes, man, that's like worth a lot of money, and it's going to be really special. It's a little bit freaky, right? Like, oh my God, they're growing organs in a lab and then transplant them to humans. Speaking from the perspective of a non living science professional, it seems a little freaky, but hey, man, we're in 2024. We have AI that's beginning to do some things that are interesting. We have self-driving cars, robo-taxis driving around. We got drones flying everywhere. Why can't living sciences really start breaking some of these paradigms that we have been in and doing a lot more? So I went from these guys, and I don't know the story of these guys. I would encourage you to study them. And I wouldn't invest in these guys because obviously I'm invested in these guys. I'm also invested in Catalyst Pharma. And Catalyst has been a winner for me. In Catalyst Pharma, you look at their financials, green on the screen, pharmaceutical company. Their drugs are doing quite well. They are a small company, so their growth rate is just going to stay there. Cash flow, real good cash flow. 160, they had a down year, but previous 4 years were good. So those are the two investments that resemble this guy. So I think I'm good. I'm going to keep buying into Catalyst and United Therapeutics. I like their stories. If their stories don't change, yeah, another company could come up and blow my socks, and I'd be like, yeah, I want to buy that one too, because I think let me hit the sectors, right? So I'm like, as you've noticed, I like to look at the big picture and say, what's going to work in 2025? And when we look at healthcare has, and I'm kind of going about it the wrong way. Let's see if I can do this right. Nope. Yep. So when we look at healthcare has biotech, which resembles technology stocks, right? High growth. And you look at their 5-year growth, 262, beautiful. I would gladly accept volatility and risk for returns that are better than the market. Drug manufacturers are pharmaceutical companies. And then medical distribution is also good. So these are the two places within healthcare that can really turn into something big 5 years from now. So that's my barometer of healthcare. And if you look at looking at the 1 year is looking much better. But if you saw this a year ago, like I was seeing it, biotech was like just flat. And I was like, okay, that's an opportunity. Buying into biotech when the market's ignoring it is a really good opportunity, along with pharmaceutical. So now it's kind of catching up. The 1 year is looking good. The 1 year is looking good. But it was an opportunity a year ago. It's still a good opportunity, I think. Retail is getting hammered because Walgreens is getting hammered. Rite Aid is in bankruptcy. And then there's other parts of healthcare that are not as great. Like med device isn't doing well. I think I covered Dexcom on Monday. Man, they imploded. So that's healthcare. It's a category that I think is going to do well for the remainder of 24. I think it's setting up 25 to be good as well. If a recession hits, healthcare is always good in recession. So that's another reason I like it. All right, we're rocking now, man. So we talked about Excel. Thanks, Brian, for that suggestion. All right, so let's take a look at where the markets are at. NASDAQ's down. Russell is down a little bit. S&P is down a little bit. Dow's up a little bit. VIX is up a little bit. Okay, crypto. Bitcoin, flat. And I don't know if you're still on Alpha Exchange, but I'd like to know your opinion on why crypto was down 6% in the last 5 days or so. I'm a hodler, but I was just curious to see, well, why did it go down? I don't know if you have an opinion on that. All right, let's talk about the big, powerful NVIDIA, owner of the best GPU technology on the face of this earth. My hat is off to NVIDIA. Now, NVIDIA, I begin with by saying one of the smartest organizations on the planet. Don't think I'm going to get many people to argue with that. Very expensive stock, $3.5 trillion. If we look at the NVIDIA stock, it has been an incredible rise that is left me speechless. Like, holy smokes. I own this stock back here. So my story of NVIDIA is kind of funny. Not funny, just I'll tell you how I got into NVIDIA. So my son that's 20 now, I'm in technology. So every time he said, hey, I'm interested in technology, the answer was yes. And he goes, hey, this is like 2015. I want to mine Bitcoin. And I'm like, what are you talking about? So he explained it to me. I bought him 2 GPUs. He set up a mining rig in his room. He operated it for 6 or 8 months. I was the power company, free power at our house if you're an inhabitant here. So that's where I got introduced into GPUs. I got more informed on Bitcoin, how it's mined, how blockchain works. And to me, the more I dug, the more interested it got. I bought NVIDIA stock at that time, and I really bought it with the story around Bitcoin. And that's where the accelerated computing originally started with gamers, right? Gamers needed better graphics that would be presented on their display at real-time speeds. So that's where the accelerated computing that's where the start of the company was. And then that technology was used for Bitcoin mining. And now we need accelerated computing to build large language models for AI. And that's where the stock has just exploded. It's gone up 772%. Since the low point was at the end of 22. So this thing's been rocking 1,000%. Beautiful. Congratulations to anybody who really believed in the company and bought into it. So mad respect to the company. But when companies do this, and they go parabolic like that, it usually, and I have not found one example where the stock did this and everybody lived happily ever after. No, it's always a very painful situation. And the closest example to NVIDIA that I believe in is our friends at Cisco. They were building the internet, which was real. Their stock went parabolic, and then it just crashed. At the same time, Cisco was growing their revenues, profit, free cash flow, everything. Yet the stock crashed, and it's never gotten back to its height. Cisco ended up being a huge company. It's real. They built the internet. They had the best technology circa 1999 on the planet. Nobody argued that. But they just overplayed the stock. The stock detached itself from valuations. And once it started to go down, it got really painful. And I can show you Intel, same story, around the same era. And you can see other stocks. Where's this one going to go? it's hard to imagine that it's going to go way up here. It really is. It's a $3.15 trillion company. Okay. That's a huge valuation. It's not like, hey, they're $100 million valuation. Absolutely, they can become $1 billion company. Okay, that's a different story. But they went, 10x means that 2 years ago, they were a $300 billion market cap company. Now they're $3.15 trillion in valuation. So that's where my concerns, or that's where the opportunity, because I'm here to make money, starts. So when we look at NVIDIA, of course, their revenue is impressive, right? And they're a big company. But what I think is going to be the new story is when you look at these quarterly compares, the last quarter, which was released 3 months ago, they showed 262% growth in that quarter because you're comparing it to the first quarter of 24, which is $7.19 billion in revenue. But you can see the compare now is going to be higher, 1.35, almost twice the figure there. So this number is going to be harder to match. They're probably going to come in at 100% growth, 150% growth. So you're going to see a declining growth percentage. Not the end of the world. It's expected. The law of big numbers, okay, make it very hard for you to sustain these growth rates. Having said that, this is an anecdotal data point. I own another hyperscaler, little one, BT, and I listened to their earnings call. And in that earnings call, they are doing accelerated computing for some companies that want to do build outs of AI. They talked about that their lead time for NVIDIA GPUs is quite reasonable now. They said it was like 4 to 6 weeks. You put in your order, you get it in 4 to 6 weeks. Very different story than a year ago. A year ago, you were like, oh my God, I put in my order now, it's 6 months, 8 months, and then I get my GPUs. What that tells me is the supply chain for NVIDIA is there's not as much demand. So maybe this quarter is going to be okay. But if we go a year out, Blackwell's supposed to come out. Okay, maybe that's going to be interesting. But I just think that there's a list of things that can go wrong, and this stock's priced to perfection. It's priced to perfection times 3, times 4. Okay. So one more thing. So as technology, so my first computer was a big giant, the server box was a big giant box. It was Intel 386. I upgraded to get a 40 megabyte hard drive. Oof. Had my, I think it was a 3-inch floppy, and they're actually in a hard case drive. And that computer cost me as much as my car. And it was worth it. I bought it, used it for a while. I upgraded, every other year or so, my computer. And where I'm here to tell you is that over time, technology goes down in price. Now, like the computer that I'm using, it's got the storage is like thousands the size of what I originally had. The price is lower. Like the computer I'm using is less expensive than the computer I bought. When did I buy that thing? Like 1990s. So that's 35 years. 35 years ago. The price has gone down. The compute power has gone up. Feature sets have gone up. So when we talk about NVIDIA, yes, you are kings of the world, but you're in a space where technology innovation is around you. Either you need to innovate and make your product more affordable, more productive, more powerful, better, or your competitors would be happy to do so and replace you. That's the industry they're in. So as we look at their revenues, a chipset that they're selling or a GPU that they're selling today for 30 grand, if they try to sell it a year from now, they're probably going to have 10 competitors that sell it for 20 grand, 15 grand to get the same performance. So they can't do that. They have to innovate ahead of their competitors, and innovation would either lead to greater compute, or performance, which means you have to use fewer GPUs, which is good news because then you don't have to buy 10 A100s. You can only buy one, but maybe those 10 A100s were 100 grand purchase price. Now that one's 30. Okay, well, NVIDIA just suffered 70% loss of revenue. Okay. That happens in this industry, just high level. My valuation of NVIDIA. And I don't think I'm going to keep this guy. Yeah, I'll keep that guy. Okay. NVIDIA. So expand this. This is the best forecast I can give them on free cash flows. This is the best growth rate I can give them. And this is very optimistic. Semiconductor industries are cyclical. They go up, everybody builds everything they need, and then you have a loss of demand. So you go up, down, up, down, up, down. It's semiconductor. And the best valuation I can give them on cash flows is 1.8 trillion. I add cash, take away debt, and I think their stock is overpriced. And this was as of before the market opened. I don't know if the stocks moved a whole lot, but 43%. And then on their earnings per share, 19% premium, 35% premium. I have a short position. I've got $9,000 at risk, and I don't think this doesn't update automatically. I'm down 11% on my position, and I entered a short position, and I'm not. The reason I entered it is because I believe my analysis, and if it goes up 30%, I'm going to sell. It's just the market's going to teach me a lesson, and I'm going to pay for it. And I'm going to pay the market. Okay, I just paid for my lesson on NVIDIA. And if it goes down by 30%, I'm going to really think about selling. And we'll see how things sort out. I think that tonight's earnings are really going to move the stock. And more importantly, as we look at the stock, tonight's earnings are going to set the path for the next couple of weeks. If there's bad news, it's going to be a horrible couple of weeks for NVIDIA stock. If they have very good news, we'll see where it goes. It's hard to imagine they're going to go up from $3.12 trillion up to $6 trillion. It'd be like, wow, that would be incredible. But they've already been incredible for 2 years. So being incredible for one more year, maybe they have it in them. And the stock market is the stock market. It is incredible to see that the stock market for this stock built up this stock up to this valuation. It was the most valuable company on the exchange, and then it crashed it. And it was a real business. These guys are still in business. They built the internet. They did everything they said they were going to do, but the stock was priced to perfection times a couple multiples, and it ended very, very, very poorly for investors. If you're an investor, you lost. If you stuck in it for half a year and then sold, you lost 87% from the height. And if you hung on to the stock for the last 23 years, 24 years, you're down 35%. So that's my story on NVIDIA. I commit to, so I recorded a video on NVIDIA with similar thoughts in May and put it out there, and you could see it on my channel. And I commit to doing a video on NVIDIA every month. I'll do a video on NVIDIA this weekend after the earnings and share with you what I see in the earnings, and if that's changing my observation on this stock. And we'll see what happens, man. We'll see if the market's going to teach me a lesson, and I'm going to eat a big portion of humble pie, eat that portion of humble pie and say, this is how I was wrong. And the market, benefits companies that do this or that. I'm eager to learn. And if it goes to the downside, great. I'll make some money. I think I'm going to make money. I made money on Supermicro recently. I made money on CrowdStrike recently, shorting it. But I know that short positions, some of them are going to go the wrong way, and I'm going to lose money. Welcome to investing. It's not guaranteed. It's about managing risk. It's about getting better. It's about getting better year to year. But I just don't like sitting on analysis and saying, I believe NVIDIA is overpriced. And I'm a person that's like, okay, then put your money where your mouth is. Big boy. Let's put some money in the game and then track it. So I've done all my homework, and we'll see what happens. All right. This has been an awesome live stream. I'm going to land the plane. It looks like we've had a good session. Thanks for the suggestions, everybody. Pyro, thanks for joining. Looks like we got 45 viewers. Thank you so much for viewing. Please follow me on Stonks. I'm excited about the Stonks platform. I'm going to be doing this each morning. I'll be back tomorrow morning. I'll be back on Friday. And we can talk about stocks. We can analyze stocks. And football season's around the corner. If you guys, I don't know if we can talk football. I think that'd be distracting. But if anybody wants to talk about football, I am game. I'm looking forward to the football season. Let me try to bring up my so if you want to follow me, I've got a YouTube channel. You can see a lot of videos that pretty much, go down this lane of investing, value, looking at value, looking at long-term investments, trying to get to what is the value of a company. You can participate in the Discord channel I created. It's pretty damn active. So if you want to check out the Discord, this code ought to work for you to join. Facebook, not very active. Folks on Facebook are a little bit interested in investing, but not a whole lot. These guys are like, they play for keeps. A lot of the community members that are on this Discord, they play for keeps. They're out to make money. I like them. They're like me. And then Threads, I'm here. I don't do a whole lot on Threads. I spend a lot of my time now on Stonks, YouTube, Discord. And we have a community conference call on Sundays. I need your email to invite you to that. It's a group of 6 to 8 to 10 investors. We talk about stocks. And the difference being, live streams are awesome, but, the communication back is limited, right? I have to read chat messages, which is fine. This is great. But on a conference call, we can talk at length, and I record them and I put them on my channel. I think the sessions have been excellent. So if you want to be part of that, those are on Sundays. This Sunday, the session will be at 1 p.m. Eastern. I'm going for a hike with a good friend, so I'm not going to do it at 11 a.m. Eastern like I typically do. I'm going to be hiking, and then I'll get done with my hike, take a shower, and then do a live stream. So, guys, this has been an awesome live stream. Thank you so much. I'll be back on Stonks right at 4 p.m. Eastern, 1 p.m. Pacific. I'll be either in the chat, or if I can join the live stream with the rest of the crew, that'd be awesome. Because, man, the NVIDIA earnings are just going to make the internet explode. It's going to be awesome. It's going to be so fun to watch it. I'm curious. I'm looking forward to it. We'll see what happens. So with that, everybody, thanks so much for viewing. I will be on Stonks either as a viewer or a participant later today. And again, I'll be here tomorrow, 9 a.m. Eastern. If you run into a stock later today and you're like, I'd like to see what you'd like to hear what I've got to say about the stock, please bring it tomorrow and we'll take a look at it. Any feedback's welcome. I don't know how you can get a hold of me. You can go on Discord and, we can chat. Any positive feedback or feedback to improve my live streams would be greatly appreciated. And everybody have an awesome Wednesday. Good luck. Let's go make some money.